Good morning, ladies and gentlemen. My name is Greg Michaelowski from ForexLive.com. Today's date is August 11, 2022. We saw continuing claims, our initial jobless claims come in about as expected at 262 versus 263 expected. For the PPI, which was the inflation measure today, we saw the final demand month-on-month fall by minus 1.5%. Fall by minus 0.5% versus a gain of 0.2%. So the continuation of the inflation moving lower as a result of things like food and energy continued today after the CPI data yesterday. The ex-food and energy component did rise by 0.2%, which was still lower than the 0.4% estimate, which is, again, good news for that measure. We are seeing stock prices higher. The Dow Industrial Average is up around 250 points currently, and the NASDAQ index is up around 95 points. Those levels are somewhat congruent to the levels before the report came out, so there is less of a reaction, if you will, than the CPI data that we saw yesterday, which is probably as expected. We saw strong gains in the Dow Industrial Average and the NASDAQ index yesterday, so there is some limit as far as how far it can go so fast, and the news is sort of as expected. So let's take a look at the major currencies and see how they're reacting.
And comments from AirCap says macro factors may temper the rate of growth in cargo demand.
Yesterday, during this video, I talked of this key area up here between the swing lows here and here, and also going back to 2020, and the 50% retracement also of this move to the downside from the high that we saw in the end of May. So those levels come between 1.0339 and 1.03657. The 50% retracement is just above that at 1.03688, and the high price yesterday reached 1.0367 before rotating back to the downside. Now that move to the downside, I'm going to switch over to the hourly chart. Saw the price move right back down to the high price that we saw going back to last week's trading, and this is the high of this range through here. Now there were a number of different highs that form that high. In fact, this high right here at 102.773, that was where the price in the Asian session, when we fell below this previous high, where the price moved down to, and we could see we saw a quick bounce to the upside, and the buyers return with a vengeance on this hourly bar, getting above the previous high and above in the process, and above this high right here, pushing to the upside. With the inflation number here this morning, we're seeing additional upside momentum, dollar selling, and the market moving back toward those levels on the daily chart in here between the 103.39. So we're trading back within into that range through here, with the market currently trading right at 103.39 as I type back, as a matter of fact. So so there is upside resistance still for the euro versus US dollar. The price needs to get to and through. If the price is going to continue its move to the upside, we'll see how that develops here today. Risk on the downside would be another move back below the old high right here, 102.93, and then getting below the 102.77 level. That would take all the steam out of the break to the upside and leave traders who are long on the break scratching their heads. So let's take a look at the dollar versus yen next. And this currency pair is making new lows after the sharp moves to the downside yesterday. Saw the pair move below the 100, 200 hour moving average, and also below this swing area, swing high, or swing low, swing high, then break below that level, and then come back up and base and move above it, and then base again here against that area, move higher off of it. Yesterday we saw the price move below the level, fail on that break, and then reestablish support and see a corrective move to the upside. Today, initial support coming against this swing area again, tried to move higher, but in the last couple hours, the price has moved to the downside with the help of the CPI or PPI data. On the downside, we do have the 100-day moving average looming below at 131.225 today. Recall from last week's trading, the price low came down to test that 100-day moving average through here, found support buyers not once but twice, and the market then rallied straight to the upside. Now the moving average, the 100-day moving average has moved higher over time, and so it is a higher level now, and also sort of within this swing area here. So again, it becomes an easier hurdle on the downside to get to and through, but as we know, traders like to use the level as a support level, as a level to define risk and limit risk. It's a low risk trading opportunity if you buy within this area ahead of the 100-day moving average, and your stop is below the level. So your hope is that we get a bounce off of the 100-day moving average like we did right here, and traders are rewarded with a move to the upside. Alternatively, if the market breaks below that level, you stop yourself out and the prices go lower. So that's the play on further weakness right here. Short-term risk for sellers looking for more downside in the dollar versus yen, or for buyers who are looking for a move back to the upside is to get back above these levels through here. If the price can get above those levels, then the bias tilts more intraday, at least, to the upside on the failure of new lows, the failure of this break, again, just similar to what we saw on yesterday's trading. Let's take a look at the sterling versus US dollar. And this currency pair yesterday saw a sharp move to the upside and then rotation back to the downside. If I were to put a Fibonacci just for giggles on from our lows right here, which was a nice little floor, by the way, to our high price right here, the price came within, fell below the 38.2% retracement, but in trading today, but stalled ahead of the 50% retracement, and we saw a move back to the upside. The rally here in the London morning session and into the soon after the PPI data has seen the price move into this swing area, swing high, swing low, swing low, swing high. So this is the extreme area which we went above yesterday, and now we're moving back into that swing area through here. So similar to what we saw in the euro versus US dollar, there is some resistance that the market needs to get to and through if the price is going to continue its move to the upside. Need to get above the 122.76 level. On a break of that level, that would be our next key target, followed by the high price for the month, and also on the swing move higher. If I go to the daily chart, swing move higher here, get above that level opens up the door for potentially further momentum on the daily chart with the 61.8 at 123.197 as another level to get to and through, and ultimately the falling 100-day moving average, if that's able to happen. Okay, if we're not able to get through, going back to the hourly chart, this area, or get through the highs through here, then we could see a rotation back to the downside here in this currency pair. So for sellers, this is an area that you want to earmark and perhaps sell against with a stop above. For buyers, this is the area that you want to get to and through if you see the price moving higher. So that's my quick morning look at three of the major currency pairs after the PPI data. My name is Greg Michalowski. Wishing you all the best and good fortune in your trading today. Bye-bye now.